Welcome to The Explainer. So today, we are tearing into the latest numbers from the home improvement giant Home Depot. And let me tell you, this report, it's a real page-turner, full of some pretty surprising twists.
All right, so let's get right into it. On the surface, the big numbers look great, right? A solid rebound. But, and this is a big but, once you start peeling back the layers, you find this really fascinating story about how they're trying to navigate this tricky economy.
Okay, first things first, let's talk about the good news. This is the stuff that made all the headlines. After what felt like a bit of a slump, people are opening up their wallets at Home Depot again. Sales are back in the green.
And I mean, they're not just up a little bit. Total sales rocketed up to $45.3 billion. Just for one quarter. That's almost a 5% jump compared to last year, which completely flips the script on that downward trend we'd been seeing.
So you might be thinking, great, more people are shopping. But that's where it gets interesting. The how behind this growth is the real story here. It wasn't about getting more people in the door. Actually, foot traffic was down a tiny bit. Nope, the growth came from you and me spending more every time we go. The average amount spent per trip creeped up over $90.
And why is that? Well, the CEO, Ted Decker, kind of spelled it out. He basically said that with interest rates being so high, nobody's really rushing out to do a massive kitchen gut or add a new wing to their house. Instead, people are focusing on smaller, more manageable projects. You know, a new coat of paint, fixing up the garden, that kind of thing. Still spending, just smarter.
Okay, so everything sounds great so far, right? Sales are up, people are spending, but hold on. This is where the plot thickens. Because for all those billions of extra dollars coming in, the profit went missing in action.
Yeah, you heard that right. Net income, that's the money they actually get to keep. It was basically flat. It even dropped a tiny bit. Think about it. It's like getting a huge raise at work, but by the time you pay all your bills, your bank account looks exactly the same. All that extra revenue just vanished.
And this right here, this is the big mystery of the whole report. It's the question we have to answer. How in the world do you sell billions more worth of stuff and not make a single extra dollar in profit? It's like they're on a treadmill, running faster and faster, but not actually going anywhere.
So, time to put on our detective hats. To crack this case, we've got to follow the money. We need to see where all that cash went instead of landing on the bottom line.
And the culprit, it turns out, isn't that complicated. The short answer? It's just getting more expensive for Home Depot to do business. Simple as that. Rising costs are basically gobbling up all the extra profit from those higher sales. And look, the numbers don't lie. Check this out. Sales went up by about 5%, but their expenses, the cost of keeping the lights on and paying everyone, that shot up by almost 9%. That's nearly twice as fast. So that little slice of profit they make on every hammer or bucket of paint they sell, it just got a whole lot thinner.
So what happens when your profits get squeezed like that? Well, you get a lot more careful with your money. And that's exactly what we're seeing. Home Depot is making a big shift in how it spends its cash. They're playing defense, you could say. They're focused on making the business stronger internally instead of just handing cash back to investors.
And when I say a big shift, I mean dramatic. Just look at the first 6 months of last year. They spent over $600 million buying back their own stock. This year, a big fat zero. Nothing. They've also hit the emergency brake on taking on new debt. Instead, they're hoarding cash and giving a little extra bump to the dividend they pay out.
All right, so we've got this really mixed bag, right? Sales are up, which is great. Profits are flat, which is not so great. So the big question is, what does Wall Street think? How is the market pricing this company? Let's talk about the stock. Before we go further, let's just do a super quick rundown of something called the P/E ratio, price to earnings. All it is really is a way to see if a stock is cheap or expensive. It tells you how much you're paying for every $1 of the company's profit. A high PE usually means people are betting on big growth down the road.
So what's the deal with Home Depot? Well, it turns out investors are paying a huge premium for it. The stock is trading at almost 26 times what the company is expected to earn in the future. I mean, that's way higher than its biggest competitor, Lowe's, and way higher than the rest of the industry. It's kind of like the designer handbag of home improvement stocks.
But here's the funny thing. Even with that sky-high price tag, the experts on Wall Street are still really bullish on it. The general consensus is a strong buy. They think the stock still has room to climb even higher. Go figure.
So that really makes you wonder, doesn't it? How is Home Depot going to justify that expensive stock price? What's the game plan to deal with these rising costs and all the changes in how we're shopping? Well, if you look at the company's own official forecast, it pretty much backs up everything we've just talked about. They're telling us, yeah, expect sales to grow a little more, but our profits are going to stay under pressure. They're even guiding for their earnings per share to actually go down this year. They're being upfront about it.
So how do they fight back? Their strategy boils down to three main things. First, they're going all in on the professional customer, the contractors, the builders. That's a huge, valuable market. Second, they want to make shopping, whether online or in-store, totally seamless. And third, they're laser-focused on making their supply chain more efficient to get a handle on those costs.
And that, really, brings us back to the ultimate question. There's no doubt about it. Home Depot is tough. It's a market leader that can weather a storm. But the question for any investor has to be, is that strength, that leadership, worth paying such a high price for the stock? In this economy, that truly is the billion-dollar question.